In order to identify and successfully execute upon daily cycle trades consistently, there are 4 steps that you should follow. They're the 4 steps that I personally follow, and I'm going to be showing you them today. So let's get right into it. Now, the first step, you may or may not like this one, but it's going to be higher time frame bias. Okay. And a big mistake that I see a lot of traders make, and a mistake that I made before I was profitable, is jumping into the markets without a higher time frame bias and just straight away looking to identify a daily cycle like this London protraction here and going to execute upon that straight away, like I say, without a bias. And what this is going to do is it's going to lead you to be swayed very, very easily in terms of market direction. And you're going to get into trades that really don't end up playing out because you don't know the higher time frame bias. So for example, here, you can see price comes and takes out this Asia low, right? And that is the classic setup for a London protraction. So maybe you get into a buy position to seek higher prices. That's very good. However, once price takes the other side of Asia kill zone, what are you going to think? You're going to think, okay, London protraction is a sweep of Asia and then move away from that, right? So you're going to think potentially price may reverse on me, which A is going to lead you to have very little conviction in your move that you got in down here. And B, potentially you're going to go ahead and try get into a sell position once we take out Asia. However, 9 times out of 10, the market is going to have a favored direction. So if you don't know what that favored direction is, you're going to get caught out. And like I say, you're not going to have enough conviction in your trades to hold it to the profit target. So in terms of higher time frame bias, it's very, very essential. And as you can see here, after taking that Asia high, price didn't reverse. Right, so you have to understand that it's not always going to reverse at Asia. You have to have the higher time frame bias to back up that daily cycle. Now, the way that I actually build my higher time frame bias is very, very simple. There's 2 steps to it. All price is ever going to be doing is either targeting external range liquidity, like old lows in a bearish market, or it is going to be targeting old highs in a bullish market. It's either going to be doing that, or we're going to be targeting internal range liquidity, which is going to be FVGs, right? So bearish FVGs if we're bearish, and bullish FVGs if we're bullish. It's very, very simple. So the market is only ever going to be doing that. So the first step to my higher time frame bias is to identify one of those things. So if we come over here, you can see on the daily price is extremely bearish. We have disrespected this internal range liquidity, right? This FVG here. We've closed through that. So the only thing that is left for price to do is come and target this low here, which is external range liquidity. So we have that. And once we have that, the next step is to identify clear bullish order flow towards that target, right? That is how you can be confident that price is actually going there. So if I was to draw out an example here, let's say we're targeting this old high. We're looking for there to be clear bullish order flow within this leg that is actually moving towards that target. Once we have those things, it's very, very obvious where price is going, and we look to trade in line with that. So like I was explaining with this example, we have the external range liquidity target. And then if we jump down onto the 4-hour, you can see that price is forming and respecting these bearish levels, right? Like this FVG here. We then form and respect this FVG here to the downside. We then form and respect this FVG here to the downside. So we're forming clear bearish order flow. So once we have those 2 things, there is a clear higher time frame bias, and we can move on to the next step. Step 2 is the liquidity sweep in the opposite direction to your higher time frame bias. So if we look at a couple of examples here, you can see that price took out this old high before moving lower. If we have a look here, price took out this old high before moving lower. You can actually see here we took out this old high as well before making a new low. And then another example here, price took out this old high before moving lower. Now these are old highs, but it can also appear in the form of equal highs and equal lows, or it can appear in the form of session highs and session lows. So here you can see in this example, this is Asia high, right? So that is another example of a liquidity level. One characteristic of these liquidity sweeps that is an absolute necessity for me that I really have to see is for it to be super aggressive. So you can see here we have this old high, we have a big wick, and then that rejects away. That is very aggressive. If we have a look at this old high here, you can see that this run up to take out that liquidity was 3 super aggressive bullish candles. Again, if we have a look at this old high here, we have very aggressive bullish candles that take out the liquidity. What we don't want to see is a very slow and sluggish move to take out that old high, right? So for example, if we have a look here, we have this old high that was taken out. But if you have a look at how slow and sluggish price was getting above there, it's very, very choppy. That's something that we don't like to see. It's very low probable. So avoid trades where it looks like that and aim for trades where the liquidity sweep is very nice and aggressive, like these examples here. Now, what that is going to do is going to be the liquidity sponsor that actually allows price to go ahead and move towards your target in the direction of the higher time frame bias. It is a crucial part of my model and also a key aspect in all 8 of the daily cycles that I use. Okay, so let's have a look at another example. We're here on the dollar index, and in terms of higher time frame bias, very quickly, price is expanded to the upside. We have this clear level of external range liquidity that price is in close proximity to. And in terms of are we getting clear bullish order flow towards this, we are. You can see that we respected this order block, pushed to the upside. We're respecting bullish arrays, right? We're even within this FVG, right? So we have a clear higher time frame bias. And in terms of the liquidity sweep, you can see that price has taken out this old low down here. We've taken out this old low down here as well. And you may notice that these are actually relative equal lows, right? So we've taken out that liquidity, which is going to be the sponsor for the move to the upside to target this higher time frame level of buy side liquidity. This leads me into step number 3, the daily cycles. Just because price has taken out your liquidity doesn't mean there's a high probability that it's going to go to your target right now. You'll see a bunch of times price will take liquidity and the move to the target will be delayed, and it will be delayed until a key time. So it's important to align this model with the aspect of time, and that is exactly what the daily cycles do. So if we have a look at this specific time period, this is London kill zone, right? This purple box, we are in London kill zone. Now I have 2 daily cycles that I use for London kill zone, and one of them is London protraction, where essentially we get Asia, and that is going to build up some kind of liquidity, right? It's going to consolidate, ideally build up some kind of range, some kind of liquidity, and then London kill zone is ideally going to come along and take out Asia's low as the liquidity for the move, and then expand to the target that I highlighted with the higher time frame bias, which is going to be this buy side liquidity, right? So we're looking for price to move lower below Asia kill zone and then expand towards our target, and ideally we get an entry somewhere within here. So then if we go ahead and actually look at this example that we have on the screen right now, you'll see that this fits the London protraction perfectly, right? If we have a look at what Asia did, it simply just consolidated, right? Very, very choppy price action, consolidated, built up liquidity. London kill zone has opened up and we've expanded to the downside, right? So this fits absolutely perfectly. And you can also see that if you didn't have the higher time frame bias, potentially you're going to see price take out Asia's high, form London up here. Potentially you're going to have a bearish bias. And as you'll see in a minute, that completely fails. So not only do we have the intraday model being presented, but we're also aligned with the aspect of time due to the daily cycles. Now, price plus time working in harmony will generate you the most high probable setups. So now it's time for step 4. But first I want to show you this daily cycles flowchart I put together for you. It's completely free for you to access. It's going to take you step by step how to identify the daily cycles. So here you can see we have London session. If you're trading London, you simply follow these steps to identify the daily cycle. And at the end here, I even include my personal criteria for my entries. If we go ahead and go down here, you can see same thing for New York. You follow these steps if you're trading New York session, you're going to be able to identify the daily cycles. And again, I've included my personal criteria that I look for when it comes to taking my entries. So I'm going to leave a link to that in the description. You can download it completely for free and you can go and follow this to identify the daily cycles very, very easily. So step 4 is the actual execution of the trade. After following the other 3 steps, you have a very good idea of where price is going to go. We have the bias, we have the liquidity sweep, we have the daily cycle. Now, we know that London session is likely to expand to the upside to target this level of buy side liquidity. So with this information, it is now your job to get yourself into a position to go and actually capitalize on the move that you're expecting. Now, don't worry, because this is actually the easiest part. If you do the other 3 steps right, you get the clear higher time frame bias, you get the aggressive sweep of liquidity, you get the very, very obvious daily cycle framework. This bit is easy, honestly. So all we're looking for is a switch from a lower time frame sell program to a lower time frame buy program. So on the way down here through the liquidity, price is bearish, right? We're in a sell program. And as you can see, we're respecting bearish PD arrays, right? Like we have this FVG here, this bearish FVG, that was respected to the downside. And then price respected this bearish order block to the downside. So all we need to have in terms of confirmation to know that this is switched is for price to stop respecting bearish arrays and start to form and respect bullish ones. So if I let this play out a little bit, you'll see that price here has a big impulse to the upside, and we actually form a bullish order block. Price closes above these 5 consecutive down candles, or is it 4? I can't count. I think it's 4. And we then form, by doing this, a bullish order block. So we're now forming bullish PD arrays. And that is the confirmation that we're now in a buy program. That price is now bullish because we weren't forming bullish arrays when we were moving lower. So that is the lower time frame switch that we look for. And from there, you can simply enter the trade, right? You can put your entry here. You can put your stop loss at the low. Now, in terms of targets, we're going to go and base the target upon that external range liquidity that we identified on the higher time frame. If it's an internal range liquidity, you're going to do the same thing. You're simply going to use that higher time frame target as your TP. You can see if you TP there, it's like a 1 to 3.5. Not a very bad trade. So if we go ahead and let's play out, you can see we start to move away from the entry and playing this out a little bit long, but you can see that we do go ahead and reach the target. So those are the 4 steps to successfully trade in daily cycles. If you want to learn all 8 of them, I'm going to leave the second link in the description that you can click on and go and do that. Now, as always, I hope you found value in this video, and I'll catch you on the next one.